CNBC TV 18, celebrating 15 years of leadership.
Welcome back. You're watching Prime Property. Achhe din never came for India's property market in 2014. Housing demand across key residential markets remains subdued thanks to high property prices and expensive lending rates. International property consultant CBRE says the general slackness in residential sales was also triggered by the affordability index going down in certain cities. CBRE says housing sales remained muted even during the festive season as a cautious buyer sentiment rode over discounts and attractive marketing offerings. So what's in store for us in 2015 is of course the big question.
See, I feel the market is literally at the bottom, so hopefully we can only go up. So I do expect 2015 to be a better year than 2014 and the economy and the market, real estate market to pick up. For the top three markets, I still feel the three markets of Bangalore, NCR and Mumbai are still, I would recommend them because most of the economic activity which is happening there and job creation will take place there. The infrastructure investments are happening quite a bit in these three cities, and I feel they will continue to remain the top three real estate markets in India.
So Anshuman, your top three picks are actually the usual suspects: NCR, Mumbai, Bengaluru. What's set to change for these cities in 2015?
All these three major cities will see maximum activity taking place in the peripheral areas where the prices are also lower. No doubt markets like Mumbai, one of the reasons why sales dropped, or even in NCR, was because the prices went up extremely high and really beyond beyond the reach of a lot of people. Besides, interest rates were high and economy was low. But most of the suburbs in these three areas will see new supply coming in at competitive prices, and therefore there would be some opportunity for an upside in these projects. But in spite of that, it will take 3 to 5 years. India is a large ship to turn around, from the economy, what we have seen the past few years, with all the new reforms and, the economic activities is expected. I expect that the real estate market will pick up, but it will take time. It's not going to happen overnight. Anybody investing right now, from the point of view of getting an upside, should look at least 3 to 5 years, take a 3 to 5 years horizon.
But would you say prices have bottomed out? Is this a good time to buy?
Very difficult to predict the market, especially a market like India where the fundamentals keep on changing and where the logic does not apply in most of the cases, because when the entire global economy was low, even the Indian economy was not performing since the last few years. We saw price increase, in 2008, 2009, 10. In many markets it's at the bottom. But it's very difficult to say, can it go down further? Maybe in some locations it may go down further. But in spite of that, I feel it's a good time to explore, look at the markets, because there are bargains out there. And especially if you're looking the long term, then it's always a good time. And if you're taking a position 3 to 5 years, because right now also some new good products are coming at a lower price, it's a good time to explore the market, because you never know if the economy starts picking up, if the global economy picks up, activity level picks up. Some of those bargains may not be there, but I don't think there's a rush. One should really take an informed decision, but certainly a good time to explore.
So in CNBC TV 18 parlance, you're basically saying invest in the blue chips, stay away from the small cities, stay away from the small markets. But what all should investors keep in mind?
I would say look at the blue chip markets, but take an informed decision in those blue chip markets, because in these blue chip markets, it's like, there are locations where the prices are too high. But at the same time, there are locations which will see infrastructure investment happening, more economic development opportunities in those areas. Like I mentioned, new supply at a competitive price. Those are the areas to look at. And in those areas, in the long term, like I mentioned, when the economy picks up, we will see more activity taking place, which does not mean that we should ignore other cities. There are opportunities in cities like Pune. I think it's a great city where, there are job creation happening there. Corporates are going in there. The city is developing. Hyderabad has been subdued for a very long time. I feel with the new political dispensation and there's uncertainty going away. Hyderabad had for quite some time a good infrastructure. again, there are corporates there. I think Hyderabad will start picking up. Chennai, again, it's a port city. It's got both manufacturing and IT developments. It has got manpower available, which is educated. So I feel even Chennai has a good long term. So all the major markets and these 3-4 markets, I would say that we'll see activity level improving in real estate over a period of time.
Okay, so Anshuman, you're also bullish on Chennai, Pune and Hyderabad. Those are also big cities. Would you say that one of the bigger lessons from the past has been to stay away from the tier 2, tier 3 cities?
What should be learned from the past is that one should not buy blindly. So what was happening is because everybody thought they will just invest and within 6 months or 3 months even they'll get appreciation and they would just buy blindly at any project. Anytime you're investing, you have to do your homework. You have to take an informed decision. So the learning should not be that we should only focus on tier 3 cities. It's like a blue chip company where the risk is lower, but there are possibility that you may get a higher return in tier 2 city. But then you have to take an informed decision where you're buying. A lot of times what happened is there would be a developer who announced a project outside the tier 2 city, which is not the right location, sell cheap. People bought because it was cheap, thinking that they'll get appreciation. I think that's the wrong way to invest. If you are investing in tier 3 cities or tier 2 cities, you should really look at why, the usual things, who's the developer, why that location, that city, what are the economic drivers, what's going to happen next 3 to 5 years in that. And I think that way, your chances of getting a good return in tier 2 cities are also good.
Now, NCR has been badly burnt. It is also, often referred to as the speculator's paradise. What would you say are the growth corridors in this market?
See, if you look at NCR, although Gurgaon right now, especially in the residential sales, are doing poorly, but Gurgaon has, a very strong foundation. With all the corporates still continuing to really look at Gurgaon seriously, we do see more large companies going there, establishing themselves, their retail malls. The infrastructure is improving slowly there. I'm quite bullish in the long term in NCR. Gurgaon will continue to do well. It will take time to recover, but we will see improved activity in Gurgaon. No doubt Noida is another one which has good infrastructure. And we are seeing investments improving there, and I expect activities to improve in Noida. But it's going to take time, but these are the 2 areas, besides Delhi itself, of course, which is really, we don't see much of real estate new activity happening, but with the new master plan, we may see that, yeah.
Anshuman, I apologize for interrupting you there, but I want to first ask you, what do you make of the entry price points for the NCR market?
Very difficult because both are different price points, and I think besides the price point, what is important is, as you know, who's the developer and are you going to get your project delivered on time and the quality which is promised. And of course the location from the point of view, again I keep on repeating myself, what is economic activity and what is infrastructure activity taking place. And then the price points really become less important. But no doubt there are different, I think these are more important because you can enter at a low price point to the project which never fructifies or doesn't come up to the mark, then you still lose out. Similarly, if we go out to Mumbai, all the peripheral areas of Mumbai, we will see activity taking place. But it will, because again Mumbai is a high price market, but then Mumbai still attracts a lot of talent, economic activity, and I would say that all the suburbs of Mumbai will start picking up. If you look at Bangalore, a lot of activity happening in North Bangalore towards the airport. It will take time, but then Bangalore has become a large market. So from anywhere and the price points are not like Delhi and Mumbai. So Bangalore can see various different areas, unlike Delhi and Mumbai, where there could be price appreciation over a long period of time because the prices have not appreciated so much.
Well, CBRE of the view there that Bengaluru likely to be one of the best performing cities in 2015. After this short break, we'll head down south to India's IT capital. Investor Clinic will also give us its top picks for investments in Bengaluru. Stay tuned.
CNBC TV 18, celebrating 15 years of leadership.